I would want to go into some of the instruments that you can leverage while trading on our platform. We have quite a number of them, and they are categorized into different. This is actually where the term forex comes from, because forex is foreign exchange, and it's literally talking about the currencies. So this category of instrument is the most traded, is the most popular, and it talks about the different currencies of different nations. These ones listed here are the majors, but this is not an exhaustive list. We have much more than this, but these are just the majors. This is just to give us, for the newbies, is to give us an idea of what currencies are traded on the platform. And on our platform, we also trade all of these commodities. Some of them are, agricultural produce, and some of them are natural resources, commodities, crude oil, gold, silver, cocoa, coffee, corn, cotton, gas, sugar. So you can actually trade all of this on our platform. And most traded, of course, is the crude oil, gold, mostly, then the rest of them too. And we'll be sharing about how you can take advantage of everything going on. I'll delve into that in a bit, but let me get you familiar with some of these instruments, so we know it's not just limited to currencies. It's a very, very broad market. Now, this third category here is stock indices. Now, these are the indices, the index that for different exchanges. The DAX, that's the first one there. Talks about that's the index is from the exchange in Germany. Nasdaq is from the US. S&P 500, FRA, HKG, Hong Kong. This is France actually, FRA. Then India, we have a friend from India here. So your index is also traded on our platform. JPN, Japan, UK 100 on this volatility index, and AUS 200 Australia. So we have stock indices on our platform, and cryptocurrencies as well. Some of us are familiar with cryptocurrencies, the new asset class. We have this four: Bitcoin, Ethereum, Ripple, and Bitcoin Cash. So these are some of the instruments that we trade on our platform. Now, we would go into the trends and how each of these categories. We'll start with the indexes, and then we'll go into the rest right now. So some of the trends, especially in times like this, will narrow it down to what's going on right now. When there's a crisis, or when if you trade the market, or if you are looking at getting into the market at this point, how can you go about it? What can you do? How can you really use all that is happening to your advantage? Let's start with this, the stock indexes. Now, the basic thing that you need to get, the basic thing is the state of the country's economy will reflect on stock indices. So if the companies, everything is going well, the companies are making money, they're hiring, profit is good, all is going well, that will reflect on the economy, and that talks directly. That would impact on the index. That's the cumulative. The index is like the accumulation of most of the biggest companies in a particular country. So if the economy is doing well, then you expect that the index would actually do well. Now, what's going on right now globally? We have a pandemic. Most of these companies are, saying their workers should stay at home. They're not producing. There's a crisis. So what would that mean? That would mean most of the indices for different countries would be falling. So if I gave an example here on the slide, we had this US unemployment claim. It came out today at 6 million. So earlier today, we had this figure, 6 million. It's a record figure. There's been never any time like this when we had 6 million unemployed people filing for unemployment in the US, and we had this today. It's a record figure. So, and that's up from 3.6 million, which was also a record like a few weeks back. Now, what does this imply? If you are trading the market immediately, instantly, that is a negative news for the economy. That means people are not at work, the companies are not producing, they would likely not make profit this quarter this year, and they'll lay off and all of that. So if you are trading the index, and that's why I took us through the categories of financial instruments you can actually trade on our platform. So what does that mean? You would sell at this point in time. And I would say really that this stay at home for me has been a very profitable stay at home. Earlier today, when this news kick broke, I was on this particular trade and I made some quick bucks. So we could listen to this news when we get to hear anything going on across the globe. Every news would impact on something. It's going to either impact on a commodity or a stock index or a currency. And we can, once we know how to interpret those news, then we can know what to do. Now let's that's just an example for stock index. We won't, really have not too much time to go into. So there's a lot really going on this now. So there's so much to draw from. Now for commodities, let's take an example for commodities now. Now oil would usually is affected by what the Middle East, if it's stable or not, because they produce a lot of crude at the Middle East. Now, at this point in time, with this COVID-19 pandemic, the one major thing that is affecting the price of oil, my colleague Michael talked about the price of oil just some minutes back. And oil has dropped drastically in the past month, drastically. About a month ago, oil was going close to $60 per barrel. That's about, I got close to $60, yes. And in weeks after the pandemic started and issues, all across the globe started, it dropped, and it dropped to below $20 per barrel. Now today there was a jump some hours ago, and it jumped close to $27. But that jump wasn't backed up by increasing demand, because most companies are shut down. Most of the demand that comes for crude are from factories across the globe that produces and manufacturing. They need crude, they need to power their plants and all of that. So when you trade the market and there is a shutdown, factories are closing down, they're not producing, demand for oil is reducing. When there is excess supply and there is no demand, or there is limited demand, naturally, that's like the most basic law of economics, prices will come down. Now, when this jump happened earlier today, some hours back actually, I knew there was no backing for this jump because demand has not increased. So that would be a good time to sell oil. So if you can interpret some of because right from that $27, as we speak, it's back to like $24 or going to $23 thereabout. So if you had gained that entry at that point, if you had entered at that point by now, you would also be smiling to the bank. So these are opportunities, fluctuations, volatility happening on a hourly basis in the market. And you can actually spot it if you can, if you have the skill and if you understand, how it works. Now, I want to also talk about quickly the safe havens. When there's a pandemic, when there is crisis, when there's uncertainty, people are scared. Maybe there's a war, and there's a bomb blast somewhere, or there's instability generally in the world, like we have right now, the virus, the COVID-19 virus. During uncertainty times, when there's uncertainty, people move to safe haven instruments, and there's safe haven instruments for commodities and also for currencies and other instruments as well. But I just want to list these three basically. Gold is one of the safest havens, I would say. It's people buy gold more when there's uncertainty across the globe. So at this period in time, we'd expect gold to jump, to go higher. And we've seen that happen in the past 1 week, gold has climbed, higher and higher. So if you are seeing, okay, there's a crisis coming or things are getting worse, then it could be a good time to buy such instruments. And Swiss franc is also one of those, considered to be safe havens. It's Switzerland franc and Japanese yen. So if if we look at the charts, actually I put an example here. That's CAD CHF. The Canadian dollar is against the CHF. I paired them together because the Swiss franc over the past couple of weeks have gained tremendously against the Canadian dollar. And why is that? The Canadian economy makes a lot from oil, and the oil has been hit in the past couple of weeks, and Swiss franc is a safe haven. So if you put this side by side and you are trading, you would want to buy the CHF, that's the Swiss franc against the Canadian dollar. So those are just some of the things that we could get to look at, identify in this kind of times, and then we can make profit from it. Now, lastly, my colleague mentioned this earlier, but I just want to touch on it. If you trade, we have an Indian on our right here, and we have most of us Nigerians. My colleague talked about the depletion of the naira, and we've experienced that recently, and it may likely get worse. That's the dollar of the other currencies will likely rise against the naira. So this investment, when you trade, when you open your account and you fund your account, you may fund with naira, but when it gets to the platform, you will be trading in US dollars mostly. So we have the euro account as well and the pounds account. But if you want to, even if you break even and there is an appreciation of the dollar against the naira, you would eventually be withdrawing more naira. So there's no better time to hedge your money, not just to put it in naira. Invest in a place where you know that you have not just the naira in the bank, but you have your money in dollars, and it could also make profit and also appreciate against your local currency. And that goes also for the Indian rupee. I think that would also apply for our Indian friend on the platform. So it's a very good time to invest, really, no matter what's happening in the globe. We hope that this would go away soon, but no matter what is going on around us, the message is it would not affect your ability to make profit or money. If the situation gets better and everything changes, then we would also identify the opportunities in the boom or in the prosperity going on. So there's always an opportunity if you can spot it. And that's the message for today. So thank you so much for listening. I'll pass on to Michael right now.